Welcome, everyone. This is the GT Wednesday winners. I'm Nelson Alvarez, one of the Goodman team's managers, and I am excited to be with you today. We're going to be talking about, the subject matter is making an extra 30 to 50,000 of income every single year without having to go get an extra job, get an extra accreditation. How about we just tweak it just a little bit? So with that, let me get started by making some announcements. I want to make sure everyone understands we need to be at conference this year. These Wednesday winners are phenomenal. On these Wednesday winners, we do nuts and bolts training. The nuts are the actual tools you need, the instruments you need to make the extra money. And the bolts, we like to say the attitude. So you have attitude trainings, and then we have technical training. Today's going to be a technical training with a little bit of attitude added in. So I want to make sure we understand at conference, March 15th and 16th, you're going to be able to rub elbows with none other than Mr. Mark Spear. You can go up to him and say, Mark, you got to give me your secret. How did you do 60,000? How do you continuously do 20, 30, 40, 50,000 month after month after month? How do you become number two, maybe edging on number one in the company? Who here would like to know how it's done? I'll tell you how to do it. Get to conference. Get to conference, sit at the table, ask Mark to buy you lunch. No, I'm just kidding. But sit with Mark at lunch and just ask him. Here at TLG, we have no problem sharing the wealth or the information to acquire the wealth. So get to conference any way you can. If you are in licensing, all I'm going to say to you is, what are you waiting for? Get out of licensing. Whoever invited you to be on this call will help you get through your licensing. They'll help you get through. They'll tie you in to the people on this team that can give you some advice if you need some, okay? So make sure you get through licensing. You can get your license in time to start making money and fund your little getaway vacation that'll teach you how to make multi-six-figure income in no time. So let me get started. A lot of you have your cameras off. Just want you to know you can hear me a whole lot better with your camera on. It's a little known secret. I want you to know it. Am I right, Mark?
It's facts.
You can hear just that much louder with your camera on. All right. So what are we talking about today? We're talking about the topic to keep your phones muted while you're in training so you don't interrupt the call. No, we're going to be talking about adding income, and you've probably heard it. You've heard it hundreds of times, but I'm going to share with you how you can tweak your presentation, explain one little thing, get the individuals you're talking to say, yeah, that makes sense, and then say, yeah, I want to do that. It's just logical to do so. See, because if you just tell them, they might doubt it. But if you get them to say it, well, if it's coming out of their mouth, it has to be true. So let's get started. I want to talk to you about creating some extra income. I'm going to share my screen, and I like to reverse engineer this. How about we talk about the money first? I want to talk about adding the income, but I need you to believe me that it's there. For those of you that are in the business, how hard would it be to add $27 of premium to any one of your sales? I want you to pretend you are a 20K producer. That means you're doing on average 20 applications a month. If you're doing 20 applications a month, I'm just suggesting, and they average each $1,000. If you don't trust me, ask Aaron Goodman. He has proven this over and over and over for the last, 12, 13 years? Ask him to tell you how many sales I did 5 years ago today. He can probably pull up the records and tell you how many sales I did. So that's how OCD he is with his numbers. He's fanatical about it. So I want to just add $27. I'm going to show you how to do $50,000 more in income. All right, you ready? So if you're a 20K producer and you do $27 extra, and that means $27 extra per application. Since you're doing 20, let's get it to annual premium. So if you sold an extra $27 of premium, multiply that by 12. That's $324 extra dollars per application in commission. Now let's multiply that 324 by, well, if you're doing that per sale, there's 20 a month. Let's multiply this by 20. That's $6,480 extra per month. Wait, Nelson, you said $27. I know, but you've got to translate it to annual premium. And then we're going to go and just get it to your contract level. But let's just do whole numbers. All right, Mark? $606,480 of additional annual premium per month. Multiply this by 12 months. That's $77,760 extra revenue you created in your business by adding $27. So let's say you're at a 70 contract. Okay, let's just keep it low. You're at a 70 contract. Multiply that by 0.7. That's $54,432 net dollars of income. Were we lying? Diane Crump, unmute yourself for a moment.
Yep.
If you can sell someone a policy for $97, okay, oh, sorry, for $70, how hard is it to help them see the value of paying $27 more, $97? Would you find that difficult?
No, makes sense every time.
If you can add an extra $100,000 of coverage, they could see the value in that. And if you could give them that extra coverage for $27, can you see your client saying thank you?
Mm-hmm. Yeah.
Okay, so let's hold this thought. $54,000 extra dollars. Let's minimize the screen and let's stop sharing that one for a moment. Is there anybody that disagrees an extra $100,000 for $27 is value added? Does anyone disagree? Because I know everyone sees the value. So if you can get skilled enough to add just $27 and add $54,000, doesn't that just make sense? Well, let me show you how to do it. Some of you have been told to do this, but you couldn't see your way in. I'm going to show you. I'm going to share with you my presentation. And in a moment, you're going to see how I do it. Some of you know what we're talking about. Others don't. But the presentation starts here. There's two components I need you to understand. You don't want to waste time in a presentation. You want to make sure they understand you're there to serve them. You want to ask them in the beginning, what do you expect from this? What do you want to see happen? Do you need information or do you need protection? If you had a choice between thinking about it or protecting your wife, sir, what would you really want to do if I could share the value? These are the types of conversations you want to have on page 1 and page 2. My page 2 of my presentation pretty much says, the question's never do we need this, we know we do. Isn't the real question making it fit your budget? Can you see any reason why you wouldn't want to protect your family if the price is right, if we could find where you feel the value and the price meet? If you ask this question, they should say, Well, yeah, if I can make it fit my budget, I'll do that. So great. Now we're on the understanding we're doing our best to meet your budget and add value. And that's key because I want to make sure they trust me. And after I go through my presentation, show them who I am, that I'm credible, explain what mortgage protection is, or explain to them if I'm doing life insurance, a life lead, we're going to talk about protecting your family and not talk about mortgage protection. I may or may not mention cash back, always mention the living benefits. And then I'm going to get to this page. And I'm going to say, hey, like I said before, all I'm going to do is review some more information on you. Mark, Diane, we're going to fill out a few applications, and then I'm going to do my best to get you approved. Does that feel fair to you? They say yes. And then I'm going to say, let me share with you why you'll never have to worry about leaving your family homeless. Boom. Now I begin the process of closing. This is key because the whole first part of your presentation is a presentation. But now we're going to get at the heart of the matter. Now we're going to get to the brass tacks. We're going to say, if I show you the value, are you ready to go forward? So I'm going to stop here for a moment because the next page is going to reveal it all. But I want you to understand, this is not just about adding income. I've got to share with you why this is important. Because I said at a 70%, I showed you what you'd make. But now let's talk about why we need to add more revenue to our bottom line. If you're at a 70-75 contract, do you understand that we're paid based on issue pay? When I showed you those numbers a moment ago and I said 77,000 was the issue pay, that's what you generated for TLG and for you. When you are going to look to get a promotion on our promotional guidelines, it's not based on the money you get on your net, it's based on gross. When you're a W-2, what they pay you is gross. But when you're a 1099 like us, gross means issue paid total volume. Yeah, you're at a 70 contract. And let's say you made that 77. At a 70%, you're going to make less. How do we raise that contract? Well, it's based on issue paid. You issue paid 77,000. I need you to understand that to get your raises, you need to base it on issue paid. So if you wrote 1,200, let's just say 1,000 in annual premium, you're going to get paid based on 70% of that. So you're going to net $700, but your promotion is going to be based on the $1,000 you brought in to the company. So that is awesome. Because think about it. You need to make 5,000 issue paid so that you can move from a 75 to an 80, 2 months in a row. And if you want to go to an 85, you need to do 7,500, 2 months in a row. And if you want to continue moving, here are the numbers. 10K, so you can get to a 90. 12.5, so you can get to a 95. 15,000 issue paid volume, so you can get to a 100% contract. So I hope I'm incentivizing you to listen carefully to what I'm going to share with you. I'm not just putting more net income dollars in your pocket. I'm also going to raise your contract level every 60 days. That means you can get a 30% increase in a year. Let's go. Let's get this done. Here's how we do it. When I come off of this page and I say, let me share with you why you and your family will never have to worry about it. Most of you are going in and selling them term, you're selling them whole life, final expense, index universal life. You're going in and giving them the meat. I want to add some potatoes. will y'all allow me to share with you how you can add an accidental, which I don't call it that, but an accidental bodily injury policy to every single sale you do? Every application, we're going to add $27. How? I'm using minimum numbers, and I'm going to use Americo. Why? Because with Americo, they bypass you needing to have a health license. And I want every single person here to have the ability to take advantage of what I'm going to share. I'm going to share with you how to add an accidental bodily injury policy, show them the value, and make them thank you for giving it to you. For giving it to them, I should say. So here's what I do. When I come off of this page, I say to them, and I'm going to go right through to it, and I'd like Mark and Diane to assist me as my clients. Can y'all do that for me? Can you unmute?
Yep.
So, Mark and Diane, it's been such a pleasure being able to explain to you the value of what we do. What I want to do now is just share with you what we're going to do next. All we're going to do is review some information, like I said in the beginning. After we review some information tonight, we're going to do our best to get you approved. We're going to fill out some applications. That way we can let the company know you're serious about protecting each other. And then that's when I go to work for you. Mark and Diane, I'm going to do my best to get you approved. Okay? Does that feel fair to you?
Yes.
Absolutely.
Oh, fantastic. So are you ready? Now I'm going to unveil it. I'm going to unveil why you two will never have to worry about your families being homeless. Okay? I want you to know that we are a full service company. What I mean by full service is we're going to protect you from any and all things that could possibly happen to you that could create a situation where you lose your home. What I want to do is I want to give you an example based on something you're very familiar with. Hey, Mark, you probably have a $50,000, $60,000, $70,000 truck outside. I want to talk to you about auto insurance for a moment. With your truck, you've probably got full service on that, right?
Yeah, you have to have full coverage. Absolutely.
All right, so full coverage just makes sense. You know, you got liability and collision. Liability protects you and Diane if you make a mistake, but collision protects the body of your car or your truck, right? Because if not, little Johnny down the street just got his license, is running down and boom, hits your car. If you don't have collision insurance and he didn't have any insurance on his car, guess what? You're out of pocket, aren't you?
Absolutely.
So having full coverage just makes sense. Don't you agree, Diane?
Yeah, that sounds good.
Well, that's how we feel about doing mortgage protection. We feel you deserve full coverage too. With mortgage protection, though, we don't call it liability and collision. We call it bodily injury and natural causes. See, because bodily injury protects your body. And what we're going to do really quickly is express to you how we do that. We're going to explain to you how you can get bodily injury and natural causes coverage, and that way you guys will never have to worry about losing your home. Let's start with bodily injury. Take a look at this.
Yeah, good job, man.
Hey,
Thank
somebody
you.
out there needs to mute.
You just went ahead. You saw that Alana was out the shower. You got undressed and just hopped in the shower. Daddy didn't even have to tell you.
This
Hey,
is what we
Nelson.
love. Hey, did you get that?
Terrell needs to mute.
Terrell.
All right,
Nelson, you're still on the slide.
Sorry, y'all.
You're still on the slide that has the blue writing on it. If you're trying to show us the other
all right,
slide.
hold on. Let me find Terrell and mute him out.
He
Sorry for the
muted.
I'm muted now, man. I'm sorry, man. So sorry. Sorry, y'all.
Hey, that's okay. We know you're excited. I'm excited too about making 50 extra grand. Let's go. So, back to what I was saying. Mark and Diane, what we're going to do is we're going to talk to you about bodily injury and natural causes. Just like you said, you wanted full coverage with your car. We're worth more than our vehicles, right? Shouldn't we have full coverage as well?
It makes sense.
Well, we're going to do bodily injury first. And do you know why you never heard about bodily injury before? See, those other guys you talk to for life insurance, they understood this is so inexpensive, they can't make a decent commission on it. And as you know, I'm a field underwriter. We focus on the coverage so we don't have to chase a commission. Let me show you this. $250,000. $250,000 is for 42 bucks. $150,000 is 35. And take a look at this. You're not going to believe this. $100,000 extra to protect Diane, and Diane, you to protect him is just $27. Heck, you can't even buy Domino's pizza and wings on a Friday night for 27 bucks. Right, Diane?
That's great. Yeah.
So what I want to suggest is, just like with your auto insurance, you'd never get just liability coverage. You want to get bodily injury. We're suggesting you do the same. And I'm going to tell you why. My first death claim ever was to a young lady that up here up north, we had a nor'easter. She was shoveling in her driveway. All she did was fall and break her ankle. Mark, that's not a big deal, is it?
No.
The doctor said, keep your foot up for 10 days and you can go back to work on crutches. She said, great. So she was off. She was relaxing, had her foot up, and then guess what? She developed a blood clot in her ankle. They went up her leg, lodged in her lung, and she died of a pulmonary embolism. Let's reverse engineer this. What caused her death, Mark? The embolism. What caused the embolism, Diane? The blood clot. What caused the blood clot, Mark?
The accident.
The broken ankle. And what was the broken ankle? A bodily injury. See, it's not just the accident of her breaking her ankle, it's the complications that came out of breaking the ankle. You do know senior citizens fall and break their hip all the time, but they never die of a broken hip. They die from the complications of the broken hip while they're in the hospital. They usually get pneumonia. So can you see where $27 for an extra $100,000 just makes sense?
Yes.
Yeah.
So which one of these best meets your protection needs? But Mark and Diane, to me, what's important is which one suits your budget.
What do you think there, sweetheart?
I think we should go for standard. You don't think right in the middle?
You're the boss. Happy
makes
wife,
sense.
happy life. Let's go with that.
There you go. He knows.
Okay. Boom. Let's stop here for a moment. Did you understand the sequence I follow? I do this with everything I do. I make an analogy, a comparison. I say, this is like that. You've got to make sure that that is something they can relate to. So I relate it to their auto insurance and I say, hey, who would ever dream of driving off the showroom floor with just liability? Oh, never. I got a big truck. Well, so now they're in agreement. And I say, well, doesn't it make sense? We're worth more than our vehicles. Well, yeah. Well, let me share with you why you didn't hear about this. Because it's so cheap. See, I'm planting seeds. I'm making suggestions. I'm letting them know this is so inexpensive. Everyone gets this because it is. And it just makes sense. So after I get them to agree with this, now is when I say, hey, this is the one that I can approve for you as a field underwriter. The next one is the one that the inside underwriters have to approve. But let's just understand. Now that I protected you for bodily injury, Mark, we can't deny that we can also die from natural causes, like a heart attack, stroke, or cancer. I mean, Mark, you could wake up dead tomorrow, couldn't you?
I could. It just happened to my father a couple of months ago.
So you understand, and I'm sorry for your loss. And I pray to God that he had something like this in place, okay? But now that we've protected you for bodily injury, let's go ahead and protect you for natural causes. And by the way, this is the one that comes with the living benefits you love so much. And then I scroll back and go, remember, Mark and Diane, you love the living benefits, right?
Right.
Well, great. This is the one that comes with those living benefits. Boom. Let's stop right here. We've got 30 minutes into this presentation. I just added 27 plus 27 to this presentation. But the only thing I'm going to do for you is, just for those of you that like to be a little fancy, I would present this as 54. And part of my presentation is saying 54 bucks. But we're not even going to do that, because I'd like to reduce it to the ridiculous and just add $27. But you do know there's two people there. When there are two, presented as one number, if your upline agrees with me, your direct upline, present it as two, a combined number, and then you can say, and by the way, Mark, you know that $54, it doesn't just cover you, it covers you and Diane. Is that amazing or what?
Mhm.
So this is based on an Americo accidental, or I call it bodily injury policy.
And the reason
wanna
you show that one, right, is because you're teaching to the masses right now. Most people don't have their health license in order to be able to use Mutual of Omaha or Foresters. Now, so understanding that, people, is that if you don't have your health license, Mutual of Omaha is a lot cheaper, as well as Foresters is cheaper than America. America is a little bit more expensive because they add $1,000 worth of life onto that. Okay, so it's advantageous for you to go get your health license if you haven't done so already.
Mhm.
I have mine. It took me about 6 months to get mine, but I went and did it. And I'll tell you, I just like Nelson's going over, I added a accidental policy to every client that qualifies.
But I don't want to do that, Mark. I want to go on the cheap. I just want to do $27. Allegra, I want you to add $27 to every one of the 20 policies you're going to do, because you're about to become a 20K producer. But if you just did 20K, that's $240,000 a year. That's not bad. I think we not all of us can be Mark Spear and do 400. Well, yes, we all can. Who's saying we can't? But if you just want to slum it and just make $240,000 a year by just selling natural causes, why not add value? Because every time you sell an additional policy, people tend to stay with their coverage. When you just sell one coverage, you've got a higher chance of cancellation. When you sell 2 or 3 in a home, they tend to keep their policies. Well, something else, someone might be saying, well, if I'm adding, and I'm going to go here for a moment, I'm going to share my screen again. If you give me a moment. I'm going to share my screen because I want to, there's somebody out there saying, but yeah, when I add that in, I was already adding in, I apologize, I lost the screen. When I add in accidental, what happens is someone out there will say, oh, that's too much. And they'll cancel, or they'll lose their opportunity to go ahead and sell natural causes. I've heard this excuse all the time. It just doesn't fly with me. And the reason it doesn't fly is because I add so much value to what I'm doing. The people get it. I'm going to come back here. Can everyone see this screen?
Yes.
Okay. So I'm on this page. I've showed them bodily injury. That's why I don't say accidental. Because when you say accidental, sometimes they say, oh, I got that at work. Oh, I bought it at my credit union. I say bodily injury, and I say it's a little more comprehensive. A lot of those accidental policies out there have tons of exclusions. Ours don't. But let's say we come over here and we decide when we sell them a term policy and we add accidental rider. Well, here's the challenge with selling just a term policy and adding a rider. When you add a rider, that means they go ahead and buy the policy and get an extra, it doubly indemnifies you. That means if you got 100,000 and you died in an accident, you get 2. And it's only like $12, $15 more. But here's the problem. The day they cancel their policy, they cancel the term and there goes everything. But when they have a bodily injury policy, a standalone policy for 100, 200, 250,000 with Americo, whoa, that's a lot of value. So now they think twice about canceling their policies. And if they cancel the term, guess what? They're not going to cancel the other one. And let me add in one more thing. Do you understand that this is a guaranteed issue? There's no underwriting. You can't underwrite an accident. So therefore, it rushes right through. So we're talking about adding $50,000 worth of income that hardly ever charges back. I'll say that again, hardly ever charges back. Because if they're going to cancel, let's say they have a $100 term policy and a $27 accidental policy that gives them $100,000. And they've got the furnace went. They've got to find a way to cut back on their bills. Which one do you think they cancel first? The term. It's that's just 27 bucks. I may as well leave it. You got paid right away and it stays on the books. And I got so many ands about this. And if you add an extra $50,000, like Mark and I and Diane and many of the other leaders do, are you paying for your leads from your pockets or from your profits? My entire business now is pretty much funded by all of my bodily injury policies. If I add an extra $300, $400, $500 that week, well, that's lead money. If I want to go to conference, I just say, well, I need X, Y, and Z. I need to add it up. I need $1,500 for conference between tickets and buying Mark his favorite tequila. Oh, wait, that was my inner thoughts. I need an extra $1,500 for conference. Well, let me see. I'm making $324 by selling one policy, but there's a couple I'm signing up, so that's two. So that's, let's just say $600 each. I just need to sell 4 of these puppies, and I just got my conference money. I got money to take my wife on vacation. I got money to have a fantabulous Valentine's Day. I just have to add another Moo accidental or Americo accidental policy every week. Guys, it's a win-win situation any way you look at it. And I'll go back and say one more thing. Every time you add volume to your weekly, monthly, yearly income, you're making it easier for yourself to get a promotion. So now you're keeping more money that you're bringing in as revenue for your business. I want to take a moment and open this up for questions. I want to make sure people keep this in mind. You're talking to people that want more coverage. If you're doing life, please don't make the mistake that I've noticed there's been a little bit of a trend. So we've added life leads to our arsenal. And what are some of y'all doing? Saying, well, they wanted they wanted to get final expense. They just wanted 15,000. Watch this. Hey, Mark, I know you expected to just get 15,000. I know you weren't thinking you could get a lot more than that. But I want to share with you, I work with 22 different companies, 180 plus products, and I found a company that will allow me to give you a blended policy. Yes, because you know what? You're at risk not only from this, you're at risk of that. Let me ask you a question, Mark. Who's more likely to die from a heart attack? An 80-year-old or a 25-year-old?
80-year-old.
And who's more likely to die doing a Papa Wheelie on a motorcycle? An 80-year-old or a 25-year-old?
25-year-old.
Mark, you're 26. Can you see that you're more likely to die from some type of a bodily injury? Doesn't it make sense to give you more coverage in the area you're more at risk at? So I'm going to go ahead and give you that final expense policy, but instead of just giving you 50,000, 40,000, 30,000, whatever it was I was going to do. I want you to have 150,000, and no, it's not going to be double. It's actually just going to be $27 more. $27? Yeah. For $27, I can give you 115,000. I told you, as a field underwriter, we focus on the coverage, Mark. So we don't have to chase a commission. We want to make sure the value's added. Guys, it's a
I'm
win-win
sold. Sign me up.
situation.
Let's go.
It's a win-win situation. I just shared with you how just selling one extra policy adds for you, your bottom line. It's going to add, I'll do it again on the calculator, $27. This. Multiply that by 12 gives you the amount you're making gross, your annual premium. We can deduct what your contract level is, but I just want to talk in gross numbers. Multiply 27 times, or 324 times 2, husband and wife. Now let's multiply that, 648. We're doing 20 policies a month, so let's multiply that by 12 times. By 20 times. Now let us 12,960 a month times 12 months. Holy smokes. Well, let's divide that by 2. Let's just keep this simple. 77,000, but you're at a 70 contract, so multiply that by 0.7. Is it all right if I drop the mic right now? Boom.
That's what I make in a
So,
year.
27 bucks could buy you a new car, take you on vacation, make your wife really happy. When you say, honey, you're a stay-at-home wife, I want to give you $25,000 for what you do. What do you mean 25,000? I'm worth 50. No, I'm just kidding. Guys, this is free money. You just have to deliver it, package it, put a bow on it, and master your craft. So with that, I want to open it up to any questions anyone may have.
I have one question, real quick. What's the cutoff point, cutoff age for Americo to get a client accepted?
Thank you, Mark. I always knew you are my boy in the background, even though you're Pepsi and I'm Coke. This is the one caveat I will include with Americo. If you don't have another license, the cutoff is 60. If they're over 60, you won't be able to do this. Here's what I'm going to recommend. Your client deserves to have that accidental policy. Don't you agree? Everyone nod yes. Ask your upline to get on the call with you. If your direct upline will do this for you, add value to your client. Because remember, if they have 2 policies, they're more likely to stay on the books. Instead of selling them $15,000 in final expense, if your upline will come in the call with you and sell the bodily injury for you, you added value to the client. Your sale stays on the books. That's one chargeback you're not going to have to worry about. I'd recommend strongly you get your health license and stop paying your upline and keep the money for yourself. But you can also learn the value of having added value to every case. So thank you. That's with Americo. With all other carriers that sell it, that's Foresters and Mutual of Omaha, you will be able to enjoy another 10 years because the cutoff for 70 for you to sell it. But the policy lasts till age 80. And if they're under age 45, you can sell it with return of premium.
50.
Oh, thank you, Mark. Well, you would know because you're closer to that age.
And be
still got
honest with you, Nelson, I just canceled, I called up my Mutual of Omaha, and I know this was my last year to get the ROP. So I was like, hey, listen, I know I got 100,000. Can we bump that up? I went up to 300,000 just to make sure.
I want to add one more thing. Don't be afraid to sell When you get your health license, Mutual of Omaha and Foresters go up to 500. When I talk to my firemen, this is what I say. Mark, forgive me, I almost forgot you drive truck. Do you know I have a special coverage that I use for all my truckers, firefighters, motorcycle riders, and ambulance riders? I give them 500,000, and you're not going to believe this because I've got it myself. I'm 58, and I pay $63 for $500,000 worth of coverage. Because a few years ago, rather than talk to you by Zoom, I had to come to your house. And in upstate New York, going from New York to Pennsylvania is treacherous on 81. And I take care of my mom. I wanted to make sure I had enough money to have my mortgage paid off and then have my sister come from Florida and give her at least 5 years of income to make sure she took care of my mom. Can you see where 500,000 would do that? Oh, wow. For 63 bucks, 500,000. Yeah. Sign me up. Motorcyclists, firefighters, policemen, and really anybody that says they do something hazardous. Linemen, Mark, linemen. They climb up the pole to stretch the cable. One gust of wind, poof, they're gone.
I'll give you an example on that because we had a technician pass away. He was doing disconnects. But anybody that knows cable, when you don't pay your bill, you get disconnected. They have to climb up the telephone pole with a ladder to use a special tool to disconnect your cable. And so he thought, it only takes about 5 minutes to do it. But the setup for, the safety precautions and putting out your cones and parking your truck right, putting on your safety gear, well, that takes a long time. And this kid wanted to cut out that time. So he set up his ladder. He ran up there. It's only going to take me a couple of minutes. A drunk driver came down the road, smashed into his ladder, shattering it in 3 different pieces. He fell down straight onto his head and was killed. That's a 28-year-old father who's now dead because he was stupid. But think about if he had an accidental policy at that price, that his daughter would be set up. He did not have anything. He had no insurance whatsoever, and the company had to put together an internal GoFundMe page, and then they also paid for his funeral with from the company money. So, I mean, now think about how his daughter's living now.
And you can tell the story from the negative or the positive standpoint. Depending on your client, sometimes it's best to tell the story and don't tell them how someone lost. Tell them how someone gained. I have a story similar to that. We had a client, young man, 27 years old. His wife was 25. They had 3 kids. He was a truck driver. And he wanted to think about it. And finally, the wife said, well, you know what? At least get the accidental policy because it's only like 30 bucks, honey. And he said, fine. And he signed up for it. He got into a truck accident on the George Washington Bridge, and he died. And his wife called me and thanked me because they have $500,000. And she said, it can't replace my husband's income, but you know what? Thank you for making my husband at least see the value. I felt so good that I pressed them for what really I knew they needed, rather than just taking, I need to think about it. I'm doing 2 things subliminally. If they're thinking about telling me and I need to think about it, I let them know not to, okay? I'm telling them the adverse consequences of saying I need to think about it. Thank God he didn't need to think about it because he would have been out of coverage. See, so that's telling a story from the positive. But sometimes, depending on the people, you need to tell them from the negative how someone took a loss. So it depends on the situation. But Mark and I just gave you 2 stories to use. Because facts tell, stories sell. Mm-hmm. I want to give everyone a chance, Mark, to rebut, to ask questions. We did it in 45 minutes. I'm really happy about the time because we want to keep these brief, under an hour. but I want to open it up to questions from anybody. Anyone have their hand up?
Yes, Nelson, I have a question. You had mentioned IUL, term, and whole life insurance. This is Linda.
Hi,
So,
Linda.
hi, Nelson. So, how would you present this with mortgage protection?
Okay, let's make sure we understand what mortgage protection is. It's a
Mhm.
concept sale. If I was
Mhm.
selling, Winnebagos, I'd say this is Winnebago protection. If I was protecting people who rent an apartment building, I'd call it renters protection. I want to make sure, Mark, that if you pass away, your wife has at least 20 years worth of rent.
Mhm.
So any product you're using is mortgage protection. Whether you use
Gotcha.
term, an accidental policy, whole life, or an IUL, it's all mortgage protection.
Thank you.
It's just
And
an
another
insurance
thing,
policy that matches the term of the need of the client, in this case, a mortgage.
gotcha. And
Good question.
why is a medical license? I have my medical license, but why is that needed for Amico?
Okay, you don't need a health license for America. You don't.
Okay.
Technically, let me explain it. They're actually selling a $1,000 term policy with a 200, 250, 200, 150, or $100,000 term accidental rider. They're kind of getting around the law, which says you got to have a health license. So what they're doing is selling a term, which requires a life license, and then adding a rider. So that's why you don't need it. But with every other company, it is a standalone accidental policy, and that's sold with your health license, not your life license.
Gotcha. Thank you.
That was a great question. Anyone else have a question? Don't be shy. Mark and I can tell you I learned from Van Barnett. Don't be afraid to sell the $500,000 policy, because here's another philosophy that you want to buy into. People hate telling you no twice. So when you present two offerings and they say, no, I don't want, the term policy or the whole life, that's too much. Oh, okay. So you accepted that's all right, sir. If you want to just take the other one, let's move forward. Let's write you up with that. Because they say, yeah, we'll do that one, because people don't like to tell you no twice. So if you do this right, and like I end the first part of it, remember, this is full coverage, liability and collision on your car. This is bodily injury and natural causes. So when I finish and they choose one, because it's so darn cheap, then I say, listen, consider this one's done. This is the one I can approve as a field underwriter, Mark. So Diane, that means no hitting him with the frying pan over the head when he comes in late from bowling tomorrow. You've got coverage, but don't do it. Ha ha ha. No, actually, consider yourself covered as of right now. I'll have your approval momentarily. Now that we've covered you for bodily injury, we can't deny you could die from natural causes, right? You can wake up dead. All right, so let's get you protected for natural causes now. Oh, and by the way, this is the one that comes with those living benefits you love so much. I always say that when I transition.
Now, with the Mutual of Omaha and getting your health license, there's a lot more added benefits than, so you can get with Americo, you're gonna have $1,000 and then whatever the accidental they choose. It's good, you can write it to the age of 60, it's good to the age of 80. All right. It's a little bit more expensive. With Mutual of Omaha, it's less expensive, but you can also save them money. If you were to do two individual plans, it would cost a set amount of money. But if you did a family plan, it's less than the two individual plans. So you're cutting costs there as well. Now, if one or the other passes away on the family plan, the other one just gets the money. You can also add children to it, so it can be a whole entire family plan. Okay, so there's a lot more caveats to having your health license and being able to use Mutual of Omaha. It just adds a significant amount of value. But when pitching it, a lot of things that I use majority of what Nelson said is what I use. The car insurance, I mean, everything, you know, I go along with that. But you have to just like he was saying, you have to let them know, listen, if you pass away of an accident, your family is going to get both policies. Both policies will pay out. So it's all about how you're designing it and how you're showing them how to design it. Because a lot of clients, when you just leave them the option to pick A, B, or C, they might say, well, you know what, we need to think about this. Would you like as an insurance advisor, as your insurance advisor, would you like my opinion on what I would do? Okay, and then they'll, you know, 100% of the time they said, yes, I'd like to hear what you would say. And you've already gone through a financial analysis, so you know what their budget is. You don't want them climbing to the point where it's going to be astronomical and change their standard of living to where it becomes uncomfortable, right? So you know what the budget is, you know the room that they have to work with. Steer them in the direction that is affordable, but also adequate coverage. So if you're looking at $100,000 life insurance policy and $200,000 in you know, whole life coverage, or you know, term coverage to be the natural causes policy, and their mortgage is $300,000, well, then you've covered, you've done your job, right? You've given them the $300,000. So if you pass away, Nelson, of an accident, your family is going to get the full amount of the mortgage of $300,000. Does that make sense? And you fall within the age bracket where 67% of people in the United States pass away from accidents versus natural causes. So if you were to pass away in the next handful to 10 years from now, wouldn't it make sense that most likely it would be an accident? Yeah, that makes sense. Okay, and then years from now, let's say 10, 15 years later, you pass away of natural causes. Well, the mortgage is going to be paid down by 10 to 15 years, so that $200,000 is still going to make sense. And now we're keeping the cost down that fits within your budget. How does that sound? Why don't we go with that?
That is such, you know, you reminded me, there's so many angles to this. You reminded me, I used to use that approach when I first started moving into this.
Where I
You
learned
probably
it from.
got it from me when you first started, because that was what I would explain, you know, hey, let's keep the cost of the more expensive policy, which is natural causes. Let's keep that one down by mitigating it with the other one. Because let's face it, Joe, how old was your mom when she passed? Well, she's still living. How about your dad? Him too, 75 and 80. So they're still living. You're probably going to have a long life. My mom is still alive at 95, and my grandma died at 105. So if we're going to pass away, isn't it more likely we're going to pass away from little Johnny down the street, running up and down because he just got his license, hitting us? Yeah, you're probably right. It'll probably be in a bodily injury accident. Doesn't this just make sense? Do you see how I framed the argument? Mark, thank you for reminding me. I haven't come at it from that angle in years. But there are so many ways to approach adding $27. And by the way, it won't be 27. If you're using Americo, it'll be 27 for the wife and 27 for the husband. Now, if you have your health license, I'm going to highly recommend you go ahead and use Mutual of Omaha. They've got return of premium. They've got so many little things you can do, and you can bring the price down. So if they can't for any reason afford the natural causes, term, whole life, index universal life, you can say, well, you know what? At least we've already got the bodily injury covered, and you can afford that, right? Well, yeah. The principle is people hate telling you no twice. They hate telling you no twice. So they'll say no to one. So, okay, then we'll just do this. Yeah, that one's acceptable. And then you'll get the close. And by the way, $324 for spending an hour of your time. If you did 5 appointments, 300 times 5, that's 1,500 for the week. Guaranteed issue, no underwriting. You're paid in 2 to 3 days. So don't take it lightly. This is how I changed my income. I added another 25 to 45% to my income by doing bodily injury, accidental coverage.
And if.
So I know that
again,
Tanya had a question mark. Hold on, Tanya. If you can come
Yes,
back and let us see you.
I
What are you
took my
hiding for?
ponytail out. I'm pretty sure you don't want to see. My head
Okay,
was
go
hurting.
ahead. What's your
So
question?
on the bodily injury policies, the common carrier rider, can you elaborate a little? Like, is it just airlines?
Okay, I love what you're asking. This is awesome. All right, let's look at this. I added this. This is a Mutual of Omaha policy. There's more to the way I present this. I talk when I need to lean in on this a little more. I'll say, hey, by the way, the Mutual of Omaha is one of the best in the industry. You want to know why? Because most policies require you to die on the spot or within 90 days. But what if you go into a coma and die on the 91st day? You're out of luck. But with Mutual of Omaha, you have, watch this, if while insured under this policy, an insured sustains an injury which results in death within 365 days following the date of the injury, we will pay, notice how I bolded it, the accidental death benefit shown on the policy schedule. So right there, I'm telling them, sir, who knows what might happen? You might be in a coma for a while. Isn't it good to know that if something death results as a result of that bodily injury, you're covered? So that's one. Number two, if you're on vacation and you took a plane or train or an automobile to get there, I'm not quite sure, but if you're in one of those in China, when the guy carries you, runs around with you in a little basket in the back, I don't know if that counts, but if you have to pay a fare and you're traveling, common carrier will double your death benefit. So if you have 250,000, they'll give you another 250,000 as a fare paying passenger on a common carrier, which results in death within 365 days. Awesome point you just made, Tanya. That is phenomenal. And if you notice, it's when I do my presentation, it's there. It's there. It's actually on your Mutual of Omaha disclosure pages. It's on the back page. I just copied and pasted and added to my presentation so I can just gussy it up a bit. Good question, Tanya. How about Rachel? Rachel, you have a question?
Yes. So if you did a combination of a husband and wife and say they both passed away at the same time, like in a car accident or something, how does that pay out?
I'm going to share with you what I say in my presentations. Mark and Diane, listen. I want to share with you how to get your picture above the mantle or the fireplace by your great-grandchildren. If you should both go off the cliff at the same time while skiing, your family won't get 200,000. They're going to get $500,000. Do you think your grandkids will remember your name?
We'll be their favorites.
They chuckle with me, but in story fashion, I let them know they're both going to pay out their beneficiaries. But if Diane passes away, Mark would get it. And if Mark passes away, Diane would get it. And what's nice about Mutual of Omaha, I don't know the other companies. With Mutual of Omaha's policy, they changed it a few years back so that in the past, the primary person dies. If you add the spouse as a rider, when the primary dies, the policy cancels. Now, the spouse gets to keep her policy. She becomes primary and she gets a standalone policy. That's a great feature.
So when,
Does that answer your question, Rachel?
when filling out the application, Rachel, you're going to have the primary person, which would be the oldest, okay? Because that's how they're going to base the price anyway. So you fill out, that'll be the oldest, and then the spouse will be the actual first beneficiary, and then the contingent beneficiary will be, you know, whoever, children, grandchildren, whoever they want to make it. So if they both pass away, it'll go to the contingent beneficiary. Which you guys should be setting up a contingent beneficiary with every policy because of that reason. If something happened to them both, yes, we're setting them both up in mortgage protection, right? Or final expense or whatever it may be. But if you just put down a primary and they both passed away, that money just sits in limbo. It goes to, you want to make sure that it gets claimed. So you got to set up a contingent beneficiary with every application, regardless of what it is.
And I'm going to give you one more reason to do it too. Because when you go through all the beneficiaries, you go back and you call them and use our ERS system, emergency response system. That's where you call the beneficiaries and let them know, hey, I don't know if your mom, your cousin, let you know, but you are the contingent beneficiary on their policy. And I want you to be aware that if anything should happen to them, you should call me so that I can get your paperwork together. And by the way, I don't mind giving you a review of your policy and letting your contingent beneficiaries know who your agent is. Did your agent do that for you? No, he didn't. Well, I don't mind doing that for you. I'll tell whoever you want who your agent is. Oh, you're not going to try to sell me? Absolutely not. I'm doing this as a courtesy to your cousin, your brother, your mother, as part of what our company does. Really, how much would a policy be with you? So you want to get a contingent beneficiary because it's just one more opportunity to have another conversation with someone. Hey, Joe Schwartz, do you have a question? You got it. Can you unmute?
All right, sorry, I couldn't navigate that. So earlier, Mark said about having a group policy. I have a potential client at work. They're not happy with their current policy, so I'm going to talk to them on Friday. But he has 4 kids. They're 28 and 29, I believe. Sorry, they have 3 kids and they have 1 on the way. So I was trying to. I was just talking to him a little bit about it, and he said he wanted coverage for his kids as well. How does that work? And who was that through? Was that through Mutual?
Well, let's make sure we understand what we're talking about. Right now, we're talking about a bodily injury accidental policy.
Right.
Okay. But you're going to want to get him a standard policy?
A standard policy, but then I said about the bodily injury.
Right. And we're going to do that as well. Remember,
Right.
We're a full service company. We protect. This is so key for y'all to understand. They don't understand the way we work. If you let them know, oh, don't worry, I'm going to cover you for everything that you could be at risk for. I'm going to keep your family well protected. We're going to protect you for bodily injury and natural causes.
That's what I said to him.
You always want to make sure you have that in the conversation. But you do have with Mutual of Omaha a family coverage. And what it does is your wife, your primary beneficiaries, and your contingent are protected 100%, but your children will receive 25% of the face amount of the policy.
Okay.
Okay.
And then on your main policies, like term policies or IULs and things like that, you can add children term riders to that, or they can get their own individual policy. Mutual of Omaha has a very inexpensive children's whole life policy. So you can look into that as well.
Okay, awesome. Thank you.
All right. It's 9 o'clock. I'm still open to questions.
Allison has a question.
We try to keep it to an hour because we don't want you to fall asleep on us. I know you're excited. You're ready to run out there and write some policies. But who has a question? Allison?
Yeah.
Hello, Allison.
Hi. Just a quick, I had always wondered about return of premium. Are there any parameters, like, not that I would tell the client, but is there like a minimum time or maximum time or anything like that? Okay.
With our return of premium does exactly that. It returns the premium at the end. I do believe with Mutual of Omaha's policy, it's the only one I can speak to, after 15 years is prorated. So you'll get a chunk of it. After 30 years, I think it's the entire amount. But if you've got, if you go to age 80, obviously, because that's the maximum you could do with Mutual of Omaha. You can't sell it after age 70, but it lasts till age 80. Okay, so that's a very good selling tool. Oh my God, you're 69. I'm glad I caught you, Mark, because this is the last year you can get this really discounted coverage.
Up to 70, Nelson. So at 71, they cannot get it. At 70, they still can.
Okay.
70 and 364 days, yes.
Okay.
365, no.
Mhm.
But yes, there are some parameters, you know, but it is a return of premium, so you can get some of it. I don't have the details.
I think it's
We
year
should
one.
look it up.
Year 1 through year 10, I think it's like 24%. Year 10 through 20 is like 54%. 20 to 30 is 70 something percent. And then after year 30, you're fully vested, it's 100%. Now, they can keep it going if they want. They're 30%, 30 years vested. So if you write that policy on a 20-year-old, it doesn't mean it's over at 30 years and they get their money back. They can keep it going to the age of 80. It just means they're vested for the return of premium after 30 years.
I see. Okay.
Mark,
Thank you.
it just goes to show. I've been a veteran of 8 years, 9 years. Mark, I didn't know that. That's why it's so important. Okay, we learn from each other. Nobody here should be above reproach of learning. I learned from everyone. I remember learning some stuff from Christina Ward that she said. She doesn't even realize it. And she's brand new. If you leave yourself open and receptive, you can learn from everybody. You just have to want to know more. Okay, there's no stupid question except the one not asked. And if you do ask it, you should care enough to take your pen and write it down so you don't ask it again just because you did it. You can ask it again if you didn't understand, but don't ask it again just because you were too lazy to write it down. Because that's valuable time you're wasting in your business and the person you're asking. And you're taking away time from someone else that wants it bad. Write down everything we say, record it, go back, listen to it again. We welcome questions at TLG. Sometimes we sit here going, why aren't they calling me? Why aren't they asking? I've got some agents, I got to spank them all the time because they forget to call me and ask me questions and try to figure it out. Call me, ask Mark, ask Aaron, ask your upline, because that's what we're here to do. I hope I added value today to all of you. I hope I gave you another tool, yet another tool to put in your toolbox so you can create the lifestyle you want. I feel privileged and honored to be able to talk to Aaron Goodman's team and to Mark's team and everyone else's team. And I truly hope that all of you will see me at conference and bring me a sugar cookie or a dozen. That's, if you want my friendship, that's all it takes, a sugar cookie. I am cheap. And Kim Glass brought me a dozen cookies at last conference. I love that lady. And she's not even on my team. So I accept cookies as thank yous, no problem. But God bless you all. Focus on the next big gathering, which is conference. And Aaron is about to announce the prize or the contest. Boy, you're gonna love it. Make sure you have your ticket. He stretched out the qualifications for it. You have to have your conference ticket and something else. I'm not going to tell you what it is. Trust me, you want to make sure that you can qualify for Aaron's contest. He always puts one on. So,
I'll tell you the first one that I went to, and this is for everybody, to be able to associate now, I don't think I even written a policy at that point. But you know, I kind of got invited by default. Because I was in the car with Aaron. And so I went to my first one, but the association with all the top producers in the company, it's really what launched me forward. I just, you know, because you look at them, I don't want to say like they're superstars, but they are in the industry, you know, and so you get a little starstruck, and in my opinion, I got a little starstruck, and I was just like, I want to be like them. I want to be like Nelson. I want to get up on stage. I want to be able to teach people. I want to be able to be careful what you wish for, by the way, because it happens, you know. So, you know, it's just, I will tell you that as you progress in this industry, the feelings of accomplishment and celebrating the small wins and the big wins are just, it's insane, and it just elevates you to the next level. But Getting there is the key. And how are you going to get there if you're not following the system? And following the system, one of the golden rules is attend all meeting and all conferences. That's where you get the association. That's where you get to sit down with Nelson and say, hey, listen, man, how do you do this? You know, it's great to be it's great to be on the virtual things and on the team calls and things like that. But to be able to sit down with somebody in person and watch their belief level, because this business is really about belief level, but watch their belief level and see it in their eyes, their body posture, the way that they're talking to you in person, it changes you. I guarantee you that.
I can sit here and talk all night about all the people influencing me that have influenced me to this day. And I can remember every conference, plus I took a ton of pictures, but I just want you to know, if you don't go, I guarantee you, you're delaying the growth of your business by 3 to 6 months. At first, I never understood that. But some of what you heard from me today, I learned from Kimberly Noretto, my second conference, from Van Barnett, my third, talking about accidental coverage. Yeah, now, my goodness, I'm so thankful I went and saw what it did for his business. So enough said, guys.
Okay.
I appreciate you all. It's Wednesday night. You've got 2 days to rock out your week. You've got 2 days to connect with your upline, 2 days to call your leads, 2 days to re-engage your why you're doing this. You're not doing this as a hobby. Hobbies cost money. You're doing this like a business. Business pay you money. I look forward to seeing all of you at the top. Have a good night.
Thank you, Nelson.
Thanks, Nelson.
Thank you, Nelson.
Thank you.